Hello, Nasdaq followers, and welcome back to another edition of Trade Talks. I'm your host, Leanne Alfaro, and joining me right now is Mid Managing Director Chris Dearborn. Thank you so much for joining us, Chris.
Hi, Leanne. How are you?
I'm good. How are you?
I am looking forward to a very long weekend this weekend with Memorial Day right around the corner.
Exactly.
The weather here in New York is spectacular.
It is amazing. Right now, we're getting ready for Fleet Week as well. So, all great all around.
All lots of good things for the long weekend ahead.
All right. In the meantime, we're still getting through the middle of the week here. So talk to us about earnings and where we are with the markets.
So the markets right now are off just a little bit today. There's really been only one theme that's been going through everyone's minds, and that's trade talks. No pun on our name of our particular show here, but really what we should be looking at is earnings right now at the moment. So you have the tail end of earnings coming here in the US, which means mostly retail and consumer names are going to be reporting. Companies like Walmart yesterday, Target today, Ross Stores tomorrow, Urban Outfitters, VFC, and a number of other companies. So why retail reports at the tail end, and it's a good look into the consumer names. You got a mixed bag of numbers here, even though most retail numbers have beat from year over year. It was a soft comp from last year. But what you're looking at really is how well everyone is handling the potential US-China trade tariffs, especially on the retail side, where a lot of people source their products from China. And what we're seeing is a mixed bag here. Target's doing very well. They're up, as high as almost 10% earlier today, about 7 or so percent. You're seeing a number of the other retailers off just a little bit. It's a story-by-story case across the board there. And with that, you're seeing how each individual company is dealing with those sourcing issues, which should be very impactful to the broader market.
Absolutely. And now talk to me about trading volumes. They continue to trend lower.
So that's the other thing, right? We're coming into a holiday week and you expect trading volume to be lighter, and it is. We're off by over 10% to the annual pace for the last 5 days. We're trading about 6.5 billion shares on the consolidated tape average. The last couple of days, really the average should be around 7.2. This will be lighter as tomorrow and Friday happens, unless, of course, there's some major announcement on the macro level, and that means US-China trade talks is really the only one that anybody's really concerned with. You're seeing the markets move up or down a full percentage point, give or take, based off of what headline is next. You go from sanctions against Huawei to having seen the market sell off to saying, with the government coming back in the following day, the Department of Commerce saying that, we're going to give them a 90-day extension to work through what's going on. That means that may be enough time for the US and China to come to an agreement. Remember, President Trump and the Chinese premier are expected to meet on June 20th at the G20 meeting, and maybe there'll be a major announcement there. I mean, that's only a month away, and if you have a 90-day extension off of Huawei, which is the main focus here, for a lot of the companies on the sourcing side, then that could be what we're looking for to move further higher. Again, investors really are taking this as a discount, because if they were really afraid that this was going to blow up in their face, you would see the markets off on significantly higher volumes. If you go back to the sell-off that we saw right before Christmas, right, and you look at any of the charts, the market sold off significantly on higher volume. We're averaging 11 billion shares a day in a down market. That is telling you that there is fear in the market. Volume validates the move, and that volume really validated that move. The moves we're seeing here, the volume doesn't validate it. It means that we're drifting with headline to headline, and that's where the macro needs to be paid attention to. But from an investor standpoint, you have to wait and see what the final verdict is.
So as you've elaborated, trade talks are still dominating the headlines here, and we're going to take a look at a chart.
Absolutely.
Here.
So what we're going to look at here is
copper.
So copper is really a precursor to a potential trade war. It is a base metal that's used in so many different industrial manufacturing items that most people use it as a precursor to a potential trade war. And if that does happen, it could be very significant for a lot of companies on the price points, as well as a signal to a slowing economic growth globally. So what we're looking at here, my colleague Brian Joyce, who's a CMT, drew this up today in our daily mid blog. So if you haven't seen it, make sure you take a look and click onto that site. It's a very interesting read. I'm going to try to surmise it without butchering what he has. So what you're looking at here is spot copper. And what you're looking at is a 1-year chart, 5-year chart, and you're looking at different trading patterns. The one that we're looking at here significantly is the yellow line. The yellow line is a 200-day moving average, and if you look at the price of copper, it made a high here back in 2018, and then sold off with the broader market early 2018, as did the market sold off. What you're looking at here is fear of industrial growth. Once price of copper expands or rises, means that there is industrial expansion globally, since copper is such a base metal that's used in so many different items, everything from wires to new production on steel and a number of other different phone applications and things like that. So it's almost in everything. So the 200-day moving average that you're looking at on the yellow line is at 262.19. And what happened here recently is that copper has traded below the main trend support line, which is that greenish teal line that you see here. If copper does not rally above that line in the next few days and continues to press down below the 200-day moving average, you can see a collapse of this entire support line and the price point of copper moving closer to $200 based off of this move. If that happens, we are definitely in the middle of a sign that we're going to see an elongated trade war between China and the U.S., and that'll be bad for economics. So keep your eye on copper. It is one of the precursors for this environment.
Absolutely. So keep an eye on copper. It might give you an inside look on what the headlines are going to look like.
It could do, absolutely.
Well, Chris, thank you so much for the insight and for today's summarizing today's mid-blog. We'll drop a link to it right here on Trade Talks.
Thank you, Leanne.
All right, Nasdaq followers, please stay tuned for more coverage right here from the Nasdaq Trade Talks account, and we'll see you tomorrow.